in the previous video, we looked at how a hammer confirmed a prior support area, and we got a nice uptrend after that because an Eastern technical signal confirming a Western technical signal, it's a very powerful sign because we have two confirmations. So in this video, I am going to discuss the importance of keeping a stop loss. Now a standalone hammer is a bullish sign but a low probability bullish sign. Now what is a standalone hammer? With a standalone hammer, what I mean is that the hammer is not confirming any prior support area. Okay, so that is a risky trade because if I have a prior support area, it means that I know what has happened at that price point in the past. Okay, so if I know that in the past the bulls have been active at the 300 price level, then I will be confident taking this trade because the hammer is confirming that support area. But now I have a standalone hammer on this chart. I don't know whether there is any prior support area or not. So that is why I call this as a standalone or a lonely hammer. So if I were to take this trade, that would be my entry because the closing will be my entry. My stop loss will be under that, and I will expect the prices to go up, and I will expect the prices to go near these levels because that is the resistance point. So that becomes our profit target because that is where the bears are sitting. Why would I keep a profit target above that? Because I know if the bears are sitting here, they are likely to push the prices down. So that would be my profit target. Just when the bears come into the market, I want to be out of the market because I am taking a long position here. Okay. Now this is the weekly chart of Tata Motors. So every candle here represents 1 week's worth of price action. So although all of the conditions of the hammer are satisfied here, like the downtrend, the small real body near the upper end of the trading range, the lower shadow more than twice the height of the real body, all conditions of a hammer are satisfied here. But still I would not take this trade because this is a risky trade. I want some extra support confirmation. If there is additional confirmation coming, because if the hammer is confirming prior support area, which is a Western technical signal, then I am more confident. But there are aggressive traders in the market who would like to take this position. If they are willing to take that risk, this much risk, then there is no problem taking that trade. Okay, and you can notice here that exactly at that 300 level, the hammer has not been able to break that 300 level. So 300 level, we can say that it's like a round number, like ending with two zeros, which is like a psychological number. So the bulls don't want the price to go below that level. Probably that is what the hammer is signaling here. So round numbers are very powerful. I wouldn't give much importance to 301 or 302 or 299 or 298, but I would give a lot of importance to a round number or a whole number like 300. And as you can see here, the bulls have not allowed the price to close below 300. It has crossed, but it has not closed below 300. Remember the difference between crossing and closing. Okay, so it's the close that is important, not the crossing. So if I take this trade, see the price goes up here. Okay, it was a low probability high risk trade, but it still worked out because you have a properly defined hammer signal, which is a proven and a tested candlestick pattern. But what was the probability that the price would have gone up? The probability was less because the hammer was not confirming any prior support area. Now let us look at the importance of keeping a stop loss. This is an intraday chart. This is a 30-minute chart of Ambuja Cement. So every candle represents 30 minutes of price action. So you can see that on the timeline here. You don't have days or weeks here. You just have a single day and 30-minute candles. Okay. So I had mentioned that even if the trend is short term, we can still consider that as a valid downtrend for the hammer. This is a classic hammer coming after a downtrend, small real body, that to a white real body up near the upper end of the trading range, lower shadow more than twice the height of the real body. Okay, everything is perfect with this hammer. There is only one problem. What is the problem? It's a standalone hammer. Okay, it is a high risk trade, it is a low probability trade. We don't know what has happened at that price before. Okay, so if I buy on this, if I take a long position on this hammer thinking that it is likely to go up, see what happens, the price crashed. Okay, which is why we need to keep a stop loss. So if I were to take a long position here, I put a stop loss here. So instead of having, if I would not have kept this stop loss, my loss would have been this much. Because I have kept this stop loss, my loss is only this much. So I have prevented my losses from being multiplied by the market. So we want to cut our losses short and we want to multiply our gains. Okay, which is what the candlesticks allow us to do, because they give us precise entry and stop loss levels. Remember, the candles don't give us price targets. Price targets we have to take from the resistance and support levels. Okay, so in this case we have discussed that why we need to trade always with a stop loss. Never trade without a stop loss. If you are a professional trader, if you are serious about your trading, never trade without a stop loss. Okay, even if the hammer confirms prior support, I would still keep this stop loss just to have that extra comfort level. And I would define this stop loss, how much amount of money does this represent, that can be defined, which we will see later when we discuss risk management. Okay.